So everybody, welcome. Thank you so much for coming today for another Selling on the Spot event. I'm going to get us started by going into a brief presentation about selling on the spot. And then, of course, I will introduce Florian as well. All right, so this is under the Selling on the Spot Money division. So thank you for joining us. This is finance training in times of crisis. I know I spoke to a few people and they're all worried about the recession. They're worried about their finances. And I know they asked me, are we learning about crypto? Are we learning about Bitcoin, silver, gold, the stock market, recession, you name it, I heard about it. So thank you so much, Florian, for bringing this presentation to us and for partnering with me under the Selling on the Spot brand. I am Jane Warr, also known as Trainer Jane. I am proudly the founder and CEO of both Trainer Jane and Selling on the Spot, most well known for the brand Selling on the Spot Marketplace. I'm also a communications trainer, sales trainer, 5-time international best-selling author, and stage speaker. So just really briefly about Selling on the Spot. Many of you, thank you, have already come to Selling on the Spot Marketplace events where we help you grow your business by giving you a platform to sell, whether it's your product or your service, any type of offer that you want to be making. We have local and global events to serve you. And we also offer you a masterclass where I train you how to sell better, how to present yourself better on and off camera, especially for Selling on the Spot Marketplace. But of course, that can all carry forward to any other event as well. We also have a marketing division where I bring in other partners that can train under topics that I do not train. A mastery division, which is a 3-tiered sales training division. Media training, which is my partnership with the Forbes Riley in regards to media and how to present yourself. The Academy, where we keep all of our past events like this on sellingонthespotmarketplace.com. A systems division, which is to help you grow your business over a 12-month period. The money division, which of course we are here at today, another amazing presentation to help you grow and keep your finances. A mindset division to help you personally and professionally, and of course a resources division where we keep everything else. So please definitely, if you're not familiar with all of our divisions yet at sellingонthespotmarketplace.com, that is the best place to find us. So with that, I am so excited. I'm so looking forward to today's event because I know I can always learn more. And Florian definitely is the money hero, the money person I go to, my financial resource. We've talked about so many other things. So I'm really excited for this presentation. I'm ready to be taking great notes. Please take great notes along with us. If you have any questions, please put it into the chat. Florian, again, thank you for today's presentation. I'm proud to have partnered with you. Please go ahead. Please introduce yourself in today's event.
Thank you, Jane. Let's go start with a question. Since I don't see you, please type in the chat. I will open the chat so I can actually read it. Did you notice that the financial world has changed? Type in a yes or a no. If you notice that something's different than the last 20 years. Yes. Okay. Thank you. And did you, would you prefer to make money from it instead of losing it? Type in win if you prefer to win instead of lose. Okay. Is that a win? Okay, great. Thank you. And thank you so much for being here, for taking the time. I know there's lots of other stuff you could be doing right now. And obviously lots of people are doing something else right now. So I really appreciate you taking the time to be here. Okay, what you'll learn today are 3 things you need to do to be financially successful, whether there's a crisis or not. You will learn what's happening right now, why it's happening, and how to handle it so you can keep your money not only safe, but actually make money from it. Is that good? Would you like to learn that? Give me another yes in the chat box if you'd like to learn that. Okay, great, wonderful. Now, I am money teacher. My name is Florian Fritz from Vienna, Austria. And I help people to improve their financial situations by working with them on the 3 pillars of financial success, which are money mindset, money management, and money making. I started as a financial advisor And I did that for a couple of years until I found in the last crisis, 2008, that I didn't really like how the financial industry is treating their clients, meaning clients take all the risk and pay all the fees, and the banks and investment companies take all the profit and all the money. So I wanted to do something different, and I started learning. I started traveling the world to learn from some of the best trainers like Robert Kiyosaki, T. Harv Eker, a couple of investment fund managers, how real wealth strategies work, whether the markets are going up, down, or sideways, or crazy like they're going now. And I tested what I was learning in a real estate company where I was working at that time to finance all that. I was finding investors for that company, and it worked pretty well. I grew their sales by 86% on average every year for 9 years in a row. How many of you would like to grow their sales every year for 86%? Type in 86 in the chat box if you would like to have those results. So I helped those guys grow from a few $100,000 to over $40 million in real estate. So that was pretty successful. And well, if things go too well, sometimes you have to sabotage yourself. Am I the only one, or have you ever sabotaged yourself when things went well? Did you ever do that? Type in yes if I'm not the only one. That would be great. Makes me feel better. Thank you. So what I did, I started a second business because it was going so easy. I entered a company with a partner. Then I didn't take care of that company enough, and this partner bankrupted it, and suddenly I was $500,000 in debt. How many of you would not like to be $500,000 in debt? Type in me if you would not like that. So what I had to do at that time, and at the same time, the real estate company said, well, actually, we don't like to pay your high commissions anymore. We don't need that many new investors. So, well, let's stop working together. So I had the easy income was gone and a lot of debt. And that's where I had the funny idea, okay, now I know what doesn't work and I know what does work. And I've learned from some of the greatest trainers about money. So let's start helping people with their finances so they can avoid situations like that or get out of it faster if they already do. So that's what I'm doing now. I switched from selling financial products to teaching people how they don't need advisors like I used to be anymore, how can take their finances in their own hands and be more successful with their money life. Okay, so that's what we're going to talk about today. Before we get into it, maybe the most important information of them all, how many of you noticed that I'm asking a lot of questions? Type in yes if you noticed that I'm asking questions a lot. Yes, okay, thank you. And how many of you are already annoyed by all those questions and typing yes or me all the time? Yeah, type in another me if you're already annoyed by that. I'm not doing that to make you feel like a 5-year-old or to annoy you. Not annoyed, okay, thank you. I'm not doing that to annoy you. I'm doing that for a very special reason. And that reason is maybe the most important thing of the whole webinar today, okay? And that is money, and that's what we're talking about today, okay? Money requires energy. Money requires what? Say that with me. Say that. Money requires what? Okay, this way is exactly how you don't get any money. Let's try that one more time. Money requires what? Yeah, that's a bit better. Thank you. This is how it works. Now, if two people come together in a selling situation, in a discussion, usually the person with the higher energy wins, right? How many of you have kids? Type in yes if you have children. Or how many of you know somebody who has children or have ever been a kid themselves? I think we've got everyone now, okay? Now, if those children come and they want something, who will usually win? You or the children? The kids, right? Okay, so you know what I'm talking about. You understand that. Now, and the same is true for money. because in our head, we have two things fighting, right? The positive energy, the dreams and visions that we have, and the fear and the doubts that are holding us back, right? And who's going to win? Well, that part you're giving more energy. And which part do we want to win? Well, the one that's making us money. True or true? Thank you. Thank you. Now, I told you we're going to talk about three things. Three things you need to do to be successful with money. And number one is this. Number one is think. That sounds simple, right? Now, Rockefeller said it's better to take 1 day a month to think about your money than to work the whole month for it. And he also said, if you work the whole day, you have no time to make money. And then there is this book by Napoleon Hill that's called Think and Grow Rich. It's not even called Take Action and Grow Rich. It's called Think and Grow Rich, okay? So why is that so important? Well, first of all, thinking includes getting financial education. How many of you learned something about money in school? Not a lot, right? Not much. And that's a big reason why most people are doing it wrong and stay broke no matter how much money they make. And the next thing is you need to think about how you think about money. When you think about money, what comes up? Things like root of all evil, doesn't grow on trees, bad for your character, all that kind of stuff that we've heard all the time, okay? Freedom, Annette, love that, great. Thank you. When you need more money, what do you think you have to do? I have to work harder or I have to work smarter? What comes up? What do you actually think? Now, if you think I have to work harder, what are you probably going to do? Work harder, right? And does that work? Not so good. Sharon, smarter, very good for you. Now, that's why it is so important how you think about money and that you think about your money. The next thing you have to do is keep some of your money. And I've got a very simple question for you here. How much money did you make in your life so far? I want you to make a short, approximate calculation, okay? Write that number down. How much money did you make in your life? Like on average, every year, how many years? I'll just give you a couple of seconds to make a short calculation. How much money did you make in your life so far? Got a number, something approximately? Okay, good. Now, second question, how much of it did you keep? Write that number down as well. How much? No, I'm not writing it down. Okay, how does that feel? If you look at those two numbers, how much you've earned, how much you kept, how does that feel? Good or bad? Type it in the chat box. Good, bad, or terrible. Okay, great. Now, that's why it's so important. Not how much you make is what makes you rich, but how much of it you keep. And the third part you've got to be better at is make it grow. Make that money work for you. And with these three steps, you actually have the most important advice when it comes to money, which is spend less than you earn and invest the difference. Sounds super simple, but still most people don't manage to do it. So if you do, you're way ahead of most people. Actually, the average middle-class person spends for every $100 they increase their income, they increase their spending by 137. They get 100 and they spend 137 more. Do you think that's very sustainable? Not really, right? Now, to do that successfully, what you need is you need a plan. You need a plan where you're starting from, where you want to go, and what vehicles you want to use. And for that, to follow through with that plan, you need systems how you manage your money, systems how you will keep more of it, systems how you will invest it so you to make it grow. And once you have that, you got to keep yourself accountable to those systems, because it's very easy to drop your money management system or to just invest in what the banker wants to sell you. So you got to keep yourself accountable. Now, this is a very simple model, but if you follow it, you would be more successful financially, right? Type in yes if you agree that this is a very simple model and but it still would help you to be financially more successful. Okay, great. Now there's one problem with this model. Can you tell me what the one problem is? Type it in the chat box if you have any idea what the problem is. Any ideas what the problem is? This is the problem. This is the problem. Any idea what that is? No. Our brain. Yes. Annette, how did you know? This is your brain. Okay. How much of your percent of our brain do we use like actively, consciously? How much do we use? How much is that? Is that 1, 2, 3, 4, 10, 20? Type in a number. How much do we actively, consciously use? 10, Annette. Okay, great. Any other ideas? Sue also. Sue used Sharon 10. Everyone at 10. Okay, let's agree on 10. If this 10% is the conscious part, what's the other part? What's that? Unconscious. Yeah, it's the subconscious. Unconscious is when you had too many drinks. So it's a subconscious part. What's in there? Well, there's memories in there. There's experiences in there, right? With things that happened in the past. We don't think about those all the time, but in the right situations, we're triggered, they come back up. Like, how many of you have ever been heartbroken? Type in me if you've ever been heartbroken in your life. And if you don't type in me now, you're lying. Okay, so how many of you have ever lost money? Type in yes if you ever lost money in your life. Annette, yes. So, ooh, a lot of money, obviously. Sharon, yes. Okay, thank you. And how many of you have ever lent money to someone and didn't get it back? Type in another me if that happened to you. Yep, okay, yep counts as well. Okay, thank you. Now, let's say, let me give you an example. Sue and I have been working together for a while now. We're colleagues for a couple of years, and we get along very well. We're even thinking about starting a business together. Now, I'm making this up, okay? By the way, I'm just making this up. What I don't know about Sue is that a couple of years ago, she lent $5,000 to someone who didn't pay her back. None of my business, I don't need to know that, right? Now, I'm in a little difficult financial situation, and I know that Sue is a saver. She's always got money in her bank. So I say, Sue, could you lend me $5,000 and I'll be happy to pay you back in the next couple of months as soon as I can. Now, what happens when I'm asking her that question in her mind? She'll start thinking, oh my God, I'll never see that money again. I think Florian is not as trustworthy as I thought. Maybe let's not start a business together, right? So in the moment I'm asking her the question, our relationship changes. Now, the important part is this has nothing to do with me. This is everything to do with what's going on in her mind, right? And we have a very scientific name for this. I hope you did study some Latin so you can understand this. We call this the little voice. How many of you have a little voice? Type in me if you have a little voice. Yeah, mine sounds like my mom a bit, yeah. Okay, great, thank you. How many of you have more than one little voice? Like, Okay, great. Absolutely. We all do, right? And especially the whole choir, absolutely here, dancing around on my shoulders here. And especially when it comes to money, right? We have lots of little voices because we all have so much experience of things that maybe went wrong, money we lost or money we didn't get back. Now, that's the biggest problem, why we can't follow through with this simple 3 steps that we had. Think about money, make a plan, follow a system. Because at some point, things come up in our mind and say, oh, you're too old, you're too young, you're not good enough. Why do you think you could be rich? This business is never going to work out, right? Ever heard any of those voices? Okay, you want to know what to do when they come up? One very simple solution. What I want you to do that with me right now, okay? Stretch your hand out in front of that and imagine your favorite little voice up here, like, I'm not good enough, I'm not good enough, yeah? Whatever it's yours says, just imagine it here. And when you have it here, what you do then is stop. Okay, do that right now, okay? I'm not good enough, stop. You crush it. And then you tell yourself something more empowering. I can do this, I got this. This is going to work out great. I'm going to be rich, whatever you want to do, okay? Then you change it to a more supportive belief, okay? You can do this, absolutely, Jane. Now, this is super important in everything we're going to talk about now, because now we're getting into a little more technical stuff. I'm going to make it as simple as possible, but still, when your little voice comes up and, oh, this is mathematical, money is, finances are so numbers, I hate numbers, I was never good in maths, okay? I want you to crush it. Oh, this is so complicated, I don't understand it. Crush it. We're gonna make it as simple as possible, and you got this, okay? Say, I got this. Thank you. So, how many of you have been worried so far that the changes in the economy might affect you, might hurt your financial life? How many of you have been worried about that? Type in a yes if you've been worried. Okay, there's a couple of yeses, thank you. So let us make you prepared so you can be prepared instead of afraid. So you can be empowered instead of disempowered and helpless by what's happening. Okay, so what happened? Let's go back 20 years ago. How many of you remember the dot-com bubble? Yes, okay, thank you. So what happened there? Well, there was this new technology and everybody loved it and they put money in it like crazy. So if you just put .com in your company name, it was suddenly worth billions without having anything but an idea, right? And then somebody asked the stupid question is, what are those companies actually worth? And when somebody asked that questions, everybody panicked and the market crashed. Okay, now governments don't like the market crashing because companies go bankrupt. Other companies followed suit that were not even into the .com area. And that's bad for the economy, that's bad for their people because they lose money, they lose jobs, and so on. So what did they do? They made money cheap. So other companies would invest and create new jobs and everything would be fine again. Okay, so that's what they did. Now, how do you make money cheap? By having very low interest rates. That's when you can borrow money without paying a lot back. Now, what happened because of that? The next crisis appeared because everybody borrowed money, even if they couldn't afford to pay it back. That's how we created the subprime crisis in 2007, 2008. How many of you remember that? Okay, so we had too much money and somebody asked the stupid question, how much are those houses actually worth that we gave people the cheap money for? And well, in the moment somebody asked that stupid question, how much are those houses actually worth? People panicked and said, probably they're not as worth as much as we have loans for them. And what happened? Market crashed. What did the government and central banks do? Well, I said, we don't really like that crisis and that market crash. Let's put some more cheap money in the market because that will probably going to help. How many of you think that you can solve a problem with the same thing that caused the problem? Probably not, right? No, thank you, Sharon and Annette. No, exactly. No, that doesn't work. But that's what they did. They printed more money. And which worked pretty good. Yeah, like a stock market went up like crazy from 2009 to 2020. What happened in 2020? Well, this virus came along. Market crashed just for a couple of days. The central banks, the Fed, panicked, and what did they do? They printed more money because it worked so good the last time, right? Worked so great. Now, 80% of every US dollar in existence was printed in the last 30 months. 80% of all US dollars in existence. Let me show you a very interesting thing. Can you see my screen? So this is the US dollar, so total US dollar supply. In 2020, we had $4 trillion. And now we're up to 20 something. Okay, so this is what they did in 2020, 2021. Now, let me ask you again, what do you think is going to happen if you try to solve the problem with the thing that caused the problem? Doesn't really work, right? If you take a balloon and you blow in it, and you blow, and you blow, and you blow, what's eventually going to happen? Pop. At some point, it's going to break, right? It's going to explode. Now, let me tell you, give you a very simple explanation on how this thing works. We're moving to gummy bear country, okay? And in gummy bear country, for now, there's only two people. There's Jane and I. Okay? Okay, so there's Jane and Florian. And Jane is the producer of gummy bears. How many of you like gummy bears? Type in me if you like gummy bears. And I am the producer of money. Okay, so every year, Jane produces 5 gummy bears. I hope you like the red ones because they're all red now, okay? So we have 5 gummy bears and I produce $5. Now, what's the price of a gummy bear in gummy bear country? If we have 5 gummy bears and $5, what's the price of a gummy bear? Who can tell me? Type it in the chat box. 1, thank you, exactly. Now, what happens usually to a gummy bear after somebody bought it? They eat it, right? So our 5 gummy bears do follow the way of all gummy bears in the world. They're eaten. So no more gummy bears. Next year, Jane produces 5 gummy bears again. I'm not going to draw them now. I'm just going to do this. Okay, we have 5 new gummy bears, and I produce $5 again. Now we have 5 gummy bears in gummy bear country, right? And we have $10 because nobody ate the dollars, right? So what's the price of a gummy bear now? Type it in the chat box. What's the price of a gummy bear now? 2. Thank you, Sue. Thank you, Sharon. Absolutely. That is how inflation works. If I have a lot more money than I have goods, the price for the goods will go up. Now, do you want me to share that graph again that we've seen before? The one where they like went up by what, $60 trillion? Okay, so printing that much money does have an influence on our money. Now, why didn't it have that immediately? There's one more important thing about inflation. Inflation actually equals the money supply, $10, times the velocity of money. What's the velocity of money? That's actually how fast it moves. Now, if I give the money to Sue and she goes and buys a gummy bear, we have a velocity of 1 because the money was spent one time. Now she bought the gummy bear from Jane, and Jane takes the dollar and goes to Abby because she needs some service for her computer because her Zoom never works. Okay, now we have a velocity of 2 because the same dollar was spent twice. And now Abby goes and, I don't know, buys some groceries because she's hungry. We have a velocity of 3. We spent the same dollar 3 times. Okay, if I don't give the dollar to anyone, I keep it in the bank, we have a velocity of 0 and there's no inflation. That's exactly what happened. The Fed printed the money, or whatever central bank in whatever country you're in, they printed the money, they gave it to the bank kept it. And so we didn't have much inflation until the governments had the great idea to put out some helicopter money. Hey, let's give the people hundreds or thousands of dollars so they can spend them directly. That's exactly what they did. And that they did it exactly at a time where there were no products available because we had Corona. So there was this supply chain issue that we didn't really get enough goods out of China because the shipping didn't work as fast. So that's one problem. And if you have not enough products and too much money, what happens? Prices will go up. That's where our inflation comes from. Now, there's 2 types of inflation. One is cost push, and that's exactly what we're having. The supply chain doesn't work, so the products are not here. We have a couple of stupid government decisions, like we don't let companies produce more energy because they're not green enough or whatever. We had the coronavirus, we have a war going on. So that's how price goes up because the costs are rising. The second thing is demand pull. Demand pull is another way how inflation goes up, and that's when people panic. That's when I think, oh my God, I need a new washing machine, and next week or next month, it's probably going to be more expensive. Let's buy it now. The person I'm buying the washing machine needs, oh, I need a new TV. Let's buy it now before it gets more expensive. I need a new car. Let's buy it now before it gets more expensive. And people don't keep the money. They spend it as fast as possible. And once they do that, the velocity is going up that we just talked about. And when the velocity goes up, that's how hyperinflation is created, okay? Now, in the 20s, when in Germany they had hyperinflation, what happened was that at lunchtime, when the workers in the factories were paid, their wives came, took the money directly, and went to buy some bread because in the evening it would be more expensive. Okay, so that's when inflation really goes crazy. Luckily, we don't have that yet. So far, we have cost push inflation, but it all happens because there's too much money. Now, what are they trying to do against it? They're raising the interest rate. Why is that important? Raising the interest rate. Now, let's say we have 10 people in Gummy Bear country, and I produce $10, and I give 1 to everyone. Okay, they have to borrow it from me, and they have to pay it back. If I charge them 0% interest, will everybody take one? Yes or no? Probably yes, right? Now, if I charge them 10% interest, first of all, if I give away I loan out $10 and I charge 10% interest, how many do I get back? 11, right? I'll get 11. Now, where does that 11th dollar come from? If I'm the only source of money, I produce money, those 10 people, somebody will have to borrow it. Where do they borrow it from? From me. And I will charge interest from them for it. By the way, that's exactly how our financial system works. The banks create money that didn't exist and they charge interest for it. Right? Now, if I charge 10%, will all those 10 people take $1 from me if they have to pay 10%? Probably not, right? Thank you. Probably not. So, and if the people stop borrowing the money, if nobody takes it, how many of them will be able to buy Jane's gummy bears? If they don't have the money? Well, nobody. What happens to Jane's gummy bear company if nobody buys their gummy bears? It's going bankrupt, right? What happens to the workers of the gummy bear factory if it goes bankrupt? Well, they lose their jobs, they lose their income, they go broke. And that's exactly how raising the interest rate will fight inflation. If people don't want to buy anything anymore, we have no demand anymore, and then prices go back down. Great solution, right? Which one's better, inflation or recession where people don't have any money anymore? I don't know. For me, both sounds pretty bad. True? Now, equilibrium is best. Exactly, equilibrium would be great, but, well, those people in the government and central banks are PhDs. PhD stands for poor, helpless, and desperate. So they don't really know how to do that. They're always behind. They're looking at lagging indicators like the unemployment of the last quarter and not of today, because that's pretty difficult to look at. And they always do too much. They print too much money, they overheat. Now they raise too much interest, they'll crash the economy. So they never manage to get an equilibrium. They're always overshooting in both directions. Now, what can we do if we know that? First of all, now we have inflation. So you can buy assets that win with inflation. Which assets do that? That's real estate, that's commodities, gold, silver. Now, if we're getting into a recession, real estate and commodities often lose in a recession. So maybe we don't want to buy it now, or we want to buy it later. Gold and silver coins have another advantage. They don't only protect you from inflation, they also protect you from really bad government decisions. So if they're doing so bad that the dollar, euro, and whatever other currency crashes completely, you still have some silver coins, gold coins that you can use for exchange for payments. Okay. And okay, gold coins are expensive, silver coins are not. You can get one for $20, $25. So everybody can buy a couple of silver coins, and I highly recommend you do that. Now, to get into what we can really do to make money from inflation, recession, whatever is coming, we don't really know exactly what's coming, but how do we make money from this? Now, let me share the screen again, because I've got a couple of slides for you for that. First of all, please read this beautiful disclaimer. Everything I'm talking about is not personal financial advice. It is purely for educational and entertainment purposes only. Please do your own research or talk to someone who's licensed. I absolutely can't be licensed in every country for giving financial advice. So that being said, please, I don't know, take a screenshot and read this thoroughly, learn it by heart. That's the most important thing. Now, what are we doing? We're looking at tomatoes to start with, okay? Tomatoes in spring are usually, well, reasonable priced, because they don't, we're talking about the good stuff, right? Not the glasshouse watery tomatoes. We're talking about the ones that grow in the sun and are fresh and good. So in spring, 1 kilo, let's say, is $2.50. In summer, they're a lot cheaper because that's when the main harvest is. So a kilo is 50 cents. In fall, we still have some harvest. It's $2. And in winter, they're very expensive because we have to fly them in from somewhere else. They don't grow here. Then that's when they cost $5 a kilo. Now, if you want to buy one in every season, 1 kilo, you have 4 kilos and you spend $10 for it. 10 euros in my example, okay? Now, how can we do that better? We could say we don't buy 1 kilo every time, but we buy for $2.50 every time, every season. Now in spring, we buy exactly 1 kilo. In summer, we buy 5 kilos. in fall 1.3 kilo, and in winter only half a kilo. Now with the same $10, we got 7.8 kilos, almost twice as much as before. How many of you would like to get twice as much for the same money? Give me a yes if you think that's a good idea. Great, thank you. Now, does this only work with tomatoes? Yes or no? Yes or no? No, this doesn't only work with tomatoes, it also works with oranges. The cool thing about oranges is that their main harvest is in winter. So I can actually, when I don't have a lot of tomatoes, I can have a lot of oranges, and the other way around. And same system, if I buy the same amount, the same money amount every season, I get twice as much than if I buy the same orange amount. Okay, now does this only work with oranges and tomatoes? No, thank you, Jane, absolutely not. This also works with stocks, for example, right, with investments. Now, if we look at this curve of whatever investment that is, starts at 100 and then it drops. Can you make a profit with it? Obviously, yes, if I'm asking, right? Now, how does that work? If you invest every single month the same amount, let's say you invest $100 every month. Every month, every single month, $100. Okay, now what happens? In the first month, you get 1 share for 100. In the second month, you get 2 shares for 50 each. Then you get 4 shares for 25 each, 8 shares for $12.50 each, 4 shares at 25 again, 2 shares at 50. So in the end, we're actually at half price from where we started from. Did you make a profit or a loss? Well, we've talked about that. You invested a total of 600 and you own 21 shares. And 21 shares times 50, which is the price right now, is 1,050. So your profit is 450, which is 75%, 76%. You made a 76% profit, although the price is 50% below where we started. Cool or cool? Pretty cool, right? Now, people tell me, yes, but this never happens in real life. We don't have a drop of 87% and then it comes back up. That never happens, right? Well, let me show you something. This is approximately 3 months. One bar, one candle here is 1 day. So in 3 months, this dropped by 85% from 60 something to 1394. Okay. By the way, I did invest in this, so I really know it happened. Now, what happened next was this. And by the way, it's the oil price in 2020. Okay, so what happened next? It went up by 314% in the next 2 months. That's exactly the example we just saw before in the theoretical thing that never happens. So doing this, you would have made 75% profit. Now, where's the oil price today? 90 something. So you could have doubled the money again. Okay, so yes, this really happens. Okay, but now we have a crisis that's going to be longer than 6 months. Can I still make money from it? Well, let me give you an example, a longer term example for this. This is the Great Depression from 1929 to 1935. Total price, maximum price drop was 89% down here. Sorry, this is German, but anyway, it's 89%. And even after 6 years, we were still 73% down. So if you had invested 10,000 up here, it would be 3,000 down here. Pretty bad, right? Now, if you had just bought 100 every month through the whole thing here, you would, the market 73% down, but you would be 15% up. You can make a profit in a market that moves like that. Isn't that cool? Okay, so what do we use to make that profit? How does it work? What do I invest in? Well, if we look at this risk axis, there is the low risk, which is big indices like MSCI World that's investing in the whole world, or the S&P 500, which is the average of the 500 largest US companies. So very large averages of lots of companies. There's pretty low risk in that. And on the other very high risk, we have a small company like an IT startup in India. Okay, the very high risk in there. We want something that's somewhere in the middle. We want it to move because we want to be able to buy cheap, but we don't want it to go to zero. We don't want the investment to disappear, because if it disappears, well, the money's still gone. We need it to come back up a little bit, at least in the end. So what do we use for that? We use industries like the financial industry, the tech industry, the healthcare industry, the defense industry, the biotechnology industry, whatever you like, any industry is fine. Commodities are great, because how many of you think that after the crisis we'll still use oil? Yes or no? Probably yes, right? We will still use copper. Absolutely, we'll use a lot of copper for all this green energy, alternative energies, for electric vehicles, for solar energy, for wind energy. We need lots of copper for that. Okay, we'll still use copper. Will we still eat wheat? Will we drink coffee? Yes, absolutely. So commodities, great investment. We'll absolutely use them after the crisis as well. And blue chip stocks that have a lot of value in them, that are in different countries, different markets. So they're probably not going to go bankrupt during a crisis. So how do we find something to invest in? Very simple. You know Google. Ever heard of Google? Google is your friend here as well. You can type in sector ETFs, and then you'll get a list of the largest sectors and an ETFs. Does anybody not know what an ETF is? Anybody not know what an ETF is? Can't see the chat. Okay. Abby, you don't. Please tell us. Okay. Good. Then let me quickly stop the screen share, because I will get a quick explanation. Does everybody know what a mutual fund is? Type in yes or no if you know mutual fund. Okay, we do know that one. Great. Okay, we'll start with mutual funds anyway. Okay, so what people do, what happens when you give your money to a bank? The bank does the following. They invest it. They invest it in the economy. They buy stocks and shares. They buy real estate for it. They buy fixed income securities, government bonds, company bonds, and they put it in the money market. And what do banks earn with it? Usually somewhere around 10% on average. They give you 1%, aren't they generous, right? Well, the last years it was more like 0.0001%. But anyway, they give you a little piece of it and they keep the rest. Now, what a mutual fund does is they bundle a couple of investors together, well, lots of them, and put the money in a basket. We call it fund. And they get help from the bank or investment banks, especially. And what do we do with that money then? Well, we do the same thing. We invest in the economy, buying shares, companies, real estate, fixed income, bonds, money market, and we still make 10%. Now we give the bank 3% for their help, and you keep 7%. That's the idea of an investment fund. Pretty good, right? Now, these 3% minimum, often you give the bank more, should help them actually make a good profit for you, right? Now, the secret is 96% of those fund managers that are paid millions for helping you to do the same as the banks are not better than the market average. So if we say in the US, which is by far the largest stock market in the world, the average is the S&P 500, the largest 500 companies. Usually, most funds that invest in the US markets are not better than this average of the largest 500 companies. So why would I pay them all those fees. And that's exactly the next step. So we look at this again, but now what we do, we don't buy a mutual fund, we buy an ETF, which stands for Exchange Traded Fund. That's a fund that is traded in a stock exchange. So I don't need some salesperson. I just go to an online discount or cheap broker and I can buy it there like a stock of a company. And I don't get the help from a bank manager now. We just do what they're doing anyway. We're buying the market average. We just copy what they're doing. We know, okay, the 500 largest companies are in the US are these. Let's buy them. We don't need to select anything because it doesn't work anyway. Now, we still make 10% with it. We give the bank for organizing it for us. We give them 0.2% and you keep 9.8. Is that better? That's a lot better. Yes, thank you. And that's what an ETF is, an exchange traded fund, something that invests in the average of a certain market. You can have an ETF that invests in all those industries that we said, in the financial industry, in commodities, in the tech industry, the biotech industry, the healthcare industry. There is an ETF for like every sector you want to invest in. So that's why you just enter into Google, sector ETFs, and they'll give you a list. And then you can choose, oh, I would like to invest in gold miners. I'd like to invest in defense companies. And you can just do that. You don't have to pick a certain company. You can just invest in the whole market. There's also a website called justetf.com. They have probably the biggest collection of different ETFs where you can type in, okay, I want this, I want that, and you'll find an ETF for it. I'll give you a couple of examples right away. Blue chip stocks, how do you find those? Think about, okay, a company that has different products that in different markets, in different countries, they're making a profit. Don't buy companies that are already losing money now. Buy companies that are making a profit and that don't have too much debt. Because especially in a recession, they want to be able to take on more debt to get through the recession. So that's what you want to look after if you're looking for blue chip stocks. Now, what I'm telling you next is something that I usually only share with my Money Hero Club members, and which is especially following the disclaimer, this is not personal financial advice, okay? These are just things that I'm looking at or am invested in at the moment. So ETFs, gold miners are very cheap at the moment, but gold won't go away. Like in 2009, after that last big crisis, some gold some gold salesperson wanted to convince me to sell a gold fund, a gold savings plan, actually. They wanted to convince me to do that. And well, they told me the story. They said, well, gold is so great. 3,000 years ago in Persia under the Emperor Nebuchadnezzar, for 1 ounce of gold, you could buy 300 loaves of bread. And today you can still buy 300 loaves of bread for 1 ounce of gold. And decide, wow, what a shitty investment, 3,000 years, and I didn't earn one single loaf of bread. Right? But if you compare it to the US dollar, the Canadian dollar, the euro, or whatever, the US dollar since 1913 in the last 100 years lost 95% of its value. So compared to that, keeping your value for 3,000 years is pretty cool, right? So gold will be there after the crisis, and usually in a recession, when people start panicking, they go into gold and the price will go up. That's why gold miners might be very interesting. Let me share the screen again. So gold miners might be a good idea. Gold itself might be a good idea. The three or four letters that I have there are the ticker symbol. If you go into an online broker, and we talk about those in a minute as well. If you go into an online broker, that's how you search for them. GDX is a good ETF for gold miners. PHYS for physical gold is a good ETF for gold because that's a gold company that actually owns the gold. They don't just have it on paper, they actually own it in their vault. For silver, you can use PSLV. Commodities, there's lots of different ETFs for that invest in different commodities. So just by buying one, you will have oil, you'll have precious metals, you'll have industrial metals, you'll have agricultural commodities. So that's might be a very broad investment. Energy is interesting because we'll definitely need energy, which is oil, gas, electric power. So there's lots of things in there that we'll definitely need. And in the current state of the world, who's gaining most? Well, that's defense companies. If you have a moral problem with them, invest in something different. But that's what government, who's the client of a defense company? That's governments, and governments have money. They can just print it, right? And they do print it, as we talked about. So defense companies are making money right now. We have a war going on. So everybody, even Austria, even the government of the neutral country, Austria, is giving another $1 billion to the army. Okay, so defense companies. Now then, let's look at a few companies that are in that might be Kinross Gold or Wheaton Precious Metals. That's two interesting companies for the precious metal sector. First Majestic Silver Mines. Then in the oil business, ExxonMobil, you've probably heard of them. Devon Energy, very good numbers, very high dividend. They're actually paying 9% dividend at the moment. So if you just put your money in there, they'll give you 9% of your money every single year. No matter what, if the price of the company goes up or down, you'll get 9% every single year without doing anything. Where else do you get 9% for your money without doing anything? I don't know many places. They're paying 9% dividend right now. And in the defense sector, Lockheed Martin, Northrop Grumman, those are the ones by building the fighter jets and all that stuff, which are sold for millions and billions at the moment. Okay, so these are things that you could use to buy the system that we talked about, buying every single month, just a little bit. One more thing, hedging. You want to hedge your risk. What is hedging? It's a strategy that tries to limit risks in financial assets. How do I do that? Well, if I think everything's going down and I'm not really sure if everything's going down, I might just buy something that makes a profit when everything's going down, right? So with my investments, I lose a bit, and with the other investments, I win a bit. So in the end, the worst thing that happens for me is that I stay flat and I don't lose. So how do you hedge? There's lots of different and super complicated ways. Let's make it simple. Okay, there's somebody doing it for you. And what the product they're giving you is called an inverse ETF or a short ETF. And you can do that with Bitcoin, for example, because Bitcoin is probably it's at 20,000 right now, and it's probably going to go down to 12. Right? There's no guarantee on that one, but before they go back up to, I don't know, 100 or 1 million or whatever it's going to go to in the future, it's probably going to come down first. Then German market. The German market is the one that suffers most from not getting cheap gas from Russia. First, companies are already going broke. A couple of weeks ago, actually, a toilet paper company went broke. Can you imagine that? Over the last 2 years, toilet paper companies made billions on people hoarding toilet paper like crazy. And they managed to go broke just because the gas price went up like 5 times. Right? Energy prices here went up 5 times, and that already killed them. So German market's going to suffer most. I'm totally short and betting against the German market at the moment. And we had one trade from August to September, 2 months, less than 2 months, we made 140% profit on one trade against Germany. How many of you like making 140% in 2 months? Does that sound good for you? Great. So that's what we do in the Money Hero Club. And tech companies. Why tech companies? Well, they went up like crazy while the money was cheap. Because where do you go if money is cheap? Well, in the things that promise a bright future. But if money is not cheap, if it's expensive, if there's less money available, people will go out of those risky assets where we don't really know what's happening, if they will bring the bright future. They prefer to put the money into things where we already know that they have value, like energy companies, like companies that produce food, because people will always eat food, right? Crisis or not, they will eat. Okay. So that's where money goes when the market is weak. That's why tech stocks are dropping fastest. That's why for hedging, we use these things, the most risky assets, to buy ETFs, to buy funds that are actually making a profit when the market's going down. Okay. And one more thing before we do a couple of questions. Where do you buy it? When you're international, anywhere in the world, you can use Interactive Brokers, which is probably the most powerful platform of them all. Family offices, small funds are actually using Interactive Brokers for their. That means it's not the easiest platform to use. So maybe not the perfect place to start. eToro works in a lot of countries, and they have the advantage that you can buy fractional shares, meaning an Amazon share just a couple of weeks ago, before they did a split, cost $3,000 one share. Well, I only want to invest $100 into Amazon. You could do that at eToro, and then you would just own a fraction of the share. If you're in Canada, there's one platform that works very well, which is called wealthsimple.com. And I can even give you a referral link for that. And if you use that link, you'll get a little reward for signing up there. If you're in the US, you have tons of options. There's so many brokers that are mainly in the US. Fidelity, TD Ameritrade, E-Trade, Robinhood, whatever. There's lots of them. If you're in the US, I should suggest you just go to you Google brokerage comparison, and then you pick one of those. And if you're in Europe, Trading 212 is very good, offers fractional shares as well. And I have a referral link for that as well. If you use that referral link, you get a share for free. So that's where you can buy that if you are starting. Wealthsimple is simple to use. Trading 212 is simple. eToro is simple. Interactive Brokers, very powerful. Okay, before I tell you anything more, do we have any questions?
If anyone has a question, please unmute. Take a deep breath, because that was a lot to take in, and then ask a question.
Like Jane just said, that was a lot of info. Luckily enough, when I was out, I was on the phone with listening to you. I don't have a question yet because I'm still absorbing what you said, but I was able to take a couple of screenshots to refer back to recall our conversation. So thank you very much so far.
Great, thank you. Yes, I think that's a good idea, taking a couple of screenshots.
And of course, you will all receive the recording in a few business days.
And get the recording, absolutely. So to recap, what you want to definitely do is, apart from starting the cost average, but opening a brokerage account, started buying companies or shares or ETFs, is start buying silver and gold in physical form. Why you want to have it physical? That's because that's an insurance not only against inflation, but also against bad government decisions. If we have a complete crash, you'll have something in your hand. In your hand means don't put it in a bank safe, because if banks close, you won't get it. If you want to put it somewhere else and not in your home, then use a private company that offers lockers, safes, and all that stuff. Don't put it in a bank safe. And cost average works here as well. Buying one silver coin, two silver coins every single month, one month it's going to be a little expensive, other month it's going to be a little cheaper. And at the moment, it is pretty cheap. So buying silver and gold coins, very, very good idea. The next step, open a brokerage account and start buying things. You can, at the moment, start with the list I gave you. Pick whatever you like. and start buying these things. And pick one day, make a money day in a month. Pick the 1st of the month or the 5th of the month, whatever you like. And then you go in on that month, on that day of the month, the 5th or whatever it is, you open your brokerage account, you say, okay, I'm investing $100 every single month into gold mining companies. And then you do that and you're done. The next month you come back on the 5th. You open your brokerage account and you invest 100 into the same gold mining accounts, gold mining companies, or whatever you picked, right? And you do that every single month. How long does that take you every month? 5 minutes, and you're done. You don't do anything else. And then when the crisis is over, at some point you'll see, oh, I've got an amazing profit, like 20%, 50%, 70%. And then you take it. And then you find something else that's already cheap. And you start investing in that. What do you usually make with this strategy? Usually you will make somewhere between 10 and 15%, right? But we are not usually right now. These things, the gold mining companies, but I'll stick to that example, are already down 50% from their high a year ago. So they're pretty cheap right now. And at some point, they will go back to that price. Or if you take gold directly and not the gold mining companies, it will come back to the price where it was, and it will go on. It will go higher because it's at least hedging inflation. That's what it's done for the last 3,000 years. Why would it stop now? Right? So right now, the chances are even better than usually to make a higher profit, to make a 50% profit, a 70% profit, because everything is so cheap and it's not over. It's going to get cheaper. Now, Brenda asked yesterday, why is the market going up right now, like the last couple of days? Well, we don't really know exactly, but a bear market, when market's going down, is never only going down. There's always small rallies in between. And those are very dangerous. That's big traps to get more people in and then lose money when it's going back down. Why does that happen? Well, now for the last, since 2009, so for the last 13 years, there was this general rule, buy the dip. Whenever it's a bit cheaper, you buy. And the government, the Fed, the central banks will bail you out. They will provide more cheap money and the market will go up. And there's lots of people who still believe that and say, oh, this is an amazing buying opportunity. So let's jump in. It's 50% cheaper. Tech stocks are 70% cheaper. Let's buy them. And the Fed will start printing money again soon. They will give up raising interest rates and I'll make a good profit. Now, not going to happen. Why? Well, right now, and the Jerome Powell, the Fed chairman, said just a month ago, he said, our goal is to have inflation at 2%. 2%. Okay, that's a goal they set for themselves, that it's the ideal number, but they stick to it. And he said, we are moving down to 2%, even if it causes pain. That's the first time in history ever that a central bank, a Fed chairman, used the word pain in one speech 3 times. They're usually very, very careful with their words. Like they're not actually giving away any information not to scare the market, right? And he said it's going to cause pain 3 times in one single 8-minute speech. They are going to keep raising the interest rates and crash the economy. That's what they're planning to do. And as long as the economic numbers are still good, like not everybody's unemployed yet, the unemployment rate is still sort of okay. Companies are still sort of making money. So they're going to keep going. They're going to keep raising interest rates until the economy crashes and inflation is down to 2%. So the market probably, nothing is ever sure in the market. We're just dealing with probabilities, right? Not with certainties. But next year is probably going to be ugly. There's one more thing that's telling us that the next year is going to be ugly, which is called, let me show you that, which is called the yield curve. Complicated name. And that means you can borrow money for a month, you can borrow money for 3 months, you can borrow it for a year, you can borrow it for 5 years, 10 years, 30 years. True? Right? There's different time frames you can borrow money on. Makes sense, right? Now, usually you would expect that the longer the time frame you borrow money for, I know I'm not sharing the screen, I'll do it in a minute. The longer time frame you're borrowing money for, the higher the interest rate, right? Like if I borrow money for a month, I'll pay less interest than if I borrow it for 10 years. Because the risk is a lot lower, right? For 1 month, that I'll pay back in 1 month, that I'll be able to pay back in 1 month. The risk is lower than that I'll be able to pay back in 10 years. So that's what we expect, that usually the interest rate will go up. Now, what does it do today? So this is what this yield curve usually looks like, right? Interest rates going up, 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 the longer the time frame. Today, it looks like this. It's actually from 1 year to 20 years, it's going down. So the most expensive money is for 1 year. And for 10 years, you're paying a lot less in interest than that. Now, why would that be the case? Why would anybody give you money cheaper for 10 years than for 1 year? The only reason for that is that the market, the money market, the bond market expects that the Fed is going to lower interest rates again, that interest rates are going to go down again. When would they do that? Well, when we have that recession, when we got the inflation back down to 2%, when they manage to crush the economy, that's when interest rates going to go down. The market's expecting that for next year. Now, this doesn't happen very often, right? That this yield curve is upside down, that it's inverted. And every time it happened, that's below the red line. We had a recession after that, that's those gray bars. Every single time we had a recession afterwards. And we're down here now. What do you think is coming next? Okay, so probability again, no certainty. Inflation, recession next year. Inflation is going to stay with us for a while until they've managed to crush it. How do we make money from it? We keep some cash and we keep buying every single month without panicking. That's the most important thing. Don't panic, right? If you start buying now at 100 and then you buy again at 50 and then you go down to 12.50, if you remember that example, well, you might panic when you see, oh, the first money I invested is down 87% now. Let me take it out and at least I'll keep those last $12. No, 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 don't do that. That's how people lose money. That's why most people lose money, because they panic. And that, when do they start buying again? Well, at the top, when the newspaper writes, everybody should be in Bitcoin, 60,000 going to the moon, buy Bitcoin. That's exactly when you don't buy, right? When everybody tells you to buy, that's when you don't. And when there's blood in the streets and everybody says, oh my God, the stock market is dead, shares are never going to come back, don't invest in that, that's when you go in and buy as much as you can, right? That's how you make money in the stock market. You buy when there's blood in the street, even if it's your own. Okay. So that is how to make money during the recession. Do we have any other questions?
None in the chat at this time.
No
I
questions.
think, again, we're just absorbing this all, loving this all, I'm on 2 full pages of notes so far.
Only 2. Okay, I didn't talk enough. I see. Okay, so did you learn something?
Yes, this was actually pretty phenomenal information, and yeah, I'm processing. I've heard some of this before, but I never understood it quite as well. Thank you.
Great, thank you. So do you think you can make some money with this?
Oh yeah.
Okay, cool. That was the whole plan. Now, How many of you realize that the situation keeps changing as the crisis unfolds more and more, and there'll be new risks and new opportunities coming?
Always.
Yes? Okay. And to avoid those risks and take advantage of those opportunities, you would need to learn and know even more than we did today, right? How many of you would like to have that knowledge? How many of you would like to have that? Type in me if you don't have a microphone, or nod your head, or wave like crazy, all good. Okay. But how many of you would actually prefer somebody else to have that knowledge for you and just tell you what's happening and how to react? How many of you prefer that? Type in a yes, if that would be cool. Me, yes, absolutely. That is why I created the Money Hero Club. Okay. And what we do in the club is me sharing with you what I'm buying, what I'm selling from my own research and from recommendations that I get from some of the best traders and investors. I've just put myself, got myself on a super interesting list for insider tips, sort of insider tips. What that list will tell me, or you if you want, is the following. After 9/11, they found out that before 9/11, just a couple of days before 9/11, there had been some very unusual trading activity in airlines, American Airlines especially. And the CIA thought, wow, if we had seen that before, we might have had an idea that something's going to happen, right? And they asked a specialist that is a market investment specialist and a CIA advisor already. They asked him, can we create a program that would actually scan the market for these kind of activities to predict something's going to happen? And he said, okay, yeah, let's try that. And they did create that program, and they actually used it to prevent another terror attack. It actually worked. And then this guy, who was an investment specialist, thought, okay, terrorists are not the only insider traders. There's other people doing that as well, right? That have some special knowledge, and they use it. And of course, there is there's regulations and rules and laws, but there's ways to go around those. You can very easily see someone is buying whatever, American Airlines, but you can't actually, if they use options and futures and other papers around that, which the market is huge, a lot bigger than the stock market, the government doesn't find it that easily. But they created a program scanning those markets as well, finding insider activities like other people as not terrorists, but government officials, like the Trader of the Year, Nancy Pelosi, like Speaker of the House in the US, right? She made, I don't know how many millions or even billions from trading. Officially, of course, everything good, but well, she probably had some information of rules going to be passed and like prefer some companies compared to others, right? And if you know that before, you can invest. And if you have this program, you can see that, and you maybe don't know what is going to happen, but you know something's going to happen with that stock. And that's how they already found over the last couple of months stock that went up within 3 months. They went up 1,000%, 1,200%, 400%. And I'm on that list, and I'm going to get 1 or 2 stock tips out of that list from a program made for the CIA, and I will be happy to share it with my club members. So if you're interested in getting on that list, that's what we're doing as well. Me sharing with you what I'm doing. Okay, you will get information. We're discussing what's happening in the economy. We'll explain why does the market react to this policy or war or whatever situation is coming up. We'll talk about that. We're meeting twice a month live for that to discuss about these things. If you have any questions about something you're looking at, if it's a good investment, we'll talk about it, or any other financial issues. We do that twice a month live. And we have a Facebook group where you can ask questions anytime, and where I am posting if something is right now like trade alert, today I'm buying this. And if you want to do that, of course, no personal financial advice, just education and infotainment. You can do the same thing. Okay. And let me share the screen again to show you the details here. So investment tips, economic information, 2 monthly live meetings, group to ask questions anytime. You probably know Romana, or many of you know Romana. She says to join the Money Hero Club was the wisest decision I ever made. When it comes to money mindset and money management, Florian not only gives us wonderful investment tips that work, but also explains all about economy when needed. I never felt so safe and self-confident with my money decisions before. Thank you for the club and all the courses that come with it. Usually, money mastermind, financial mastermind like that will cost you 10,000 or 20,000 a year, right? Especially with the new tips that I'm getting, where I'm paying quite a lot for. The Money Hero Club is not 10,000 or 20,000. It's only 3,000 for the year. But Jane asked me, can you do something special for the Selling on the Spot community? And I said, of course I can. By the way, 3,000, just the one trade we had, 140%. How many trades that make you 140% do you need to get your 3,000 back in a year? Not a lot, right? Not many. Now, as I appreciate the Selling on the Spot community a lot, and especially the people who showed up today, who actually took the time to be here, thank you so much again. And it's my mission to help as many people as possible to elevate their financial well-being by showing them how to make more, keep more, and have more money. How many of you would like to make more, keep more, and have more money? Just asking one more time. Okay, good, everyone. So to make this offer really, really super special Selling on the Spot for you. How many of you agree that it's probably easier to have more, keep more, and make more money if you know more about money? Yes? Okay, great, thank you. That's why I created the Money Hero system, which is a 30-part video course where I'm teaching the 3 pillars of the financial success that I'm always talking about: money mindset, money management, and money making. You create a supportive money mindset, you'll get a personal and two money management systems, one for you personal and one for your business, which are a perfect combination, which with just a couple of minutes a month, again, you can have your money management all set. And I have this wonderful Indian guy, Alok, that said, thank you for this training, learned a lot about money, what, why, when, and how. Now I understand how it best to manage money. And he's looking forward to continue working together for years to come. And this usually goes for 697 euros or dollars. Just don't be confused. Euro and US dollar at the moment is exactly the same. So you can think the numbers I'm giving you, you can think in US dollars. Okay. Now, this is, you can watch one of those 30 videos a day. You can watch one a week. That's totally up to you how fast you want to go. And you can continuously ask questions about what you're learning in the club group, in the club meetings, whenever works for you. But sometimes it's good to really immerse yourself in a topic for a few hours or even for a few days and learn together with other people, to do exercises, to discuss, to learn, to have fun together, and see that money is actually simple and fun. And that's why I'm launching a new thing, the Money Hero Bootcamp, which is going to be a 2-day program where we'll do exactly that. Learn how to understand money, build a better relationship with money, get rid of financial stress and worries around money, and make it simple and fun. And this 2-day program, which is going to be in the mornings, 5-hour morning for you, not 5 o'clock, but 5 hours in the morning. I don't have the time exactly yet. And in the afternoon for Europeans. And it's $197 for those 2 days. And one more thing, to get higher returns, like 30 to 40% per year or something, you often need investment vehicles that have higher return than your everyday mutual fund, right? And those vehicles can be very risky if you don't know what you're doing. and if you don't have the right strategies. So I'm going to teach you one of those strategies, how to increase your profits and your security at the same time. How many of you want to have more profit and more security at the same time? Great. You'll learn how to make 30 to 40%, how you to do that with less than an hour a month, and you can even make $500 during that program. And I'm charged, that's a 5-day program, 1 hour per day. And I usually charge 57, although if you be able to make 500 from it, well, value should be at least 500, right? Charging 57 for it. So if we put all that together, the club for 3,000, the Money Hero System 30 video Money Learn program, the boot camp, the income generator, that's a total of 3,941 euros or dollars. And because we said we're making a special selling on the spot, you get all this package together for only 1,500 for a year at moneyheroacademy.com/club. You can get the club for 1,500 on that page when whoever you are. You can only get it with all the bonuses if you are coming from selling on the spot. Thank you for the link.
Wonderful. Thank you. I put that into the chat for you so anybody can click on it. Fantastic offer. Thank you, Florian.
And I have something else, talking about links. Now you remind me that I forgot something earlier. For Canadians that want to offer a brokerage account at wealthsimple.com, if you use this link, you'll get a little reward. And a friend of mine whose link it is will get a little reward as well. I'm afraid I don't have a Wealthsimple account because I'm not Canadian. So if you want to use that one. And of course, join the club if you want to have amazing tips on what to do with your money and get all the amazing free bonuses.
Fantastic. I know that one question that somebody will inevitably have is there a payment plan to join your club?
There's absolutely is a payment plan. You can pay monthly for the year, which is 150 a month. So actually you're getting 2 months for free if you pay for the whole year in advance. But if you do the monthly plan, I won't give you the Money Hero System, the 30-part course right away. You'll have to be in for 4 months at least to get that, to unlock it.
Fair. Okay, wonderful. I'm glad I asked that because I think for some people breaking into monthly chunks, because the whole purpose of them being here is to increase their finances, right? So
sure.
Mm-hmm.
And we do need to keep some money to work with, right?
Exactly. Yes, you just finished advising us to put money in monthly. So,
Yes.
so 150 euros, which are similar to US dollars, which works out to roughly 200 Canadian. For those that don't know, I did just check the currency. So it is roughly 200 a month. But that's a good bite-sized piece, right? In comparison.
Sure.
Is there taxes on the 150?
No, taxes included.
Fantastic. Are there any other questions? I want to make sure all questions are covered within this time that we have with Florian.
Any questions? Oh my God, I was so much faster than I thought I would be.
Well,
I don't
you
think
weren't
I have a
too
question even.
fast.
Yeah.
No questions? Okay, great. Well, that's basically, Sharon, you had a question?
Yeah, I'm sorry. How long is this good for? Is this only good for today or is it good for longer?
Well, since we have people watching actually it's only good for today,
Okay.
but since we have people watching the recording, let's say it's good for the rest of the month.
Okay. I have to do some creative accounting. So.
Yeah, I know the feeling.
Yeah,
It's good for 5 more days.
okay, all right, sounds good.
And afterwards, you can still join the club. I won't raise the price from 1,500 probably this. I won't raise it anymore this year, probably. But you are not getting all the cool bonuses.
Okay, sounds good, sounds reasonable.
And we like the bonuses. So you know what, I just did think
Actually,
about a
I'm doing
question.
the next income generator program. The one where I'm teaching this one strategy is actually going to be next week. It's starting on Monday.
Okay. And okay, but that one doesn't have a specific time, or that's a live one?
That's live for 1 hour every day, but recorded. So if you can't join the lives, you can get the recording, but you can't ask questions.
Okay.
So it's-
And what time is the live?
The live is at 1 p.m. Eastern,
1 p.m. Eastern on Monday. Okay.
Monday to Friday every day,
Okay.
1 hour every day for 5 days. And all are recorded. So if you can't make all of them, no problem. But if you can't make any of them, it's hard to ask questions.
Yes, fair. That makes sense. Okay. The question I thought of is, of course, you just taught us to invest monthly. Again, I'm trying to think of questions that others that aren't here would be asking. Is there a minimum? Let's say somebody right now is really strapped and starting somewhere, maybe they don't have $100 a month or higher. Do you have a suggestion there?
Yes, very good questions. You can do that with $10.
Mhm.
Especially if you, I don't know about Wealth Simple because I'm not using it. At eToro or Trading 212, I can buy fractional shares. I buy, okay, if I buy an ETF that's the price is 50, let's say, I'll just buy a fifth of it. Right? I'll buy for $10 every single month. No problem. 20, 25, whatever you like, it works for everyone.
Mhm. Okay, good. Yeah, because some
There's
people might be in that position, and I would love to see anybody and everybody succeed through this.
Yeah, absolutely. There's no restrictions on that. You can start with $10 a month. Probably with 5, I don't know. Depends a bit on your broker.
Everybody drink 1 less coffee or 2 less coffees a month, and you're already in.
Yeah, absolutely. You can start. There's no excuse not to start. Of course, you're not making as much money, but the percentage stays the same. But still, you got to start somewhere. And if you start making your money grow, first of all, you will like the profits at some point and say, how can I put in more money? And you'll find ways to do that. And also compounding is like as Einstein said, compounding is the biggest power in the universe. So
We wish we all started 30 years ago.
Absolutely. Since I was
Yeah.
so fast, let me show you something about compounding, okay? Since I was so much faster than I thought, we can do something. What is my compounding? Here we go. Okay, let me share the screen again. Now, the greatest power in the universe, compounding. Okay, now how does compounding work? Let me give you an example. How did Ice Age actually start? Was it suddenly cold and everything froze? Of course not, right? It was just a tiny little bit. And so this year, a little more snow, a little more ice stayed on the planet and didn't melt in summer. And because there was a little bit more ice and a little bit more snow, more sunlight was reflected, it had stayed a little bit colder, and the next year, a little bit more stayed again, and the next year, a little bit more and a little bit more, until the whole planet was covered in miles deep ice. How did the ice age disappear? Well, the other way around. It wasn't warm and everything melted away. Slowly, again, first a little bit, and then more, and then more, and then more, and then a lot more. Okay, that's how compounding actually works. Let's say you have 6% interest on $1,000. First year, you get $60. Next year, you get $63 in interest. Next year, you get $67 in interest. And so on. Now, how does that look like if we do more than 3 years? This is 3 years. This is 5 years. This is 10 years. Out of 1,000, we make 1,600 something in 10 years. You did nothing. Somebody gave you 600. Cool, right? And if we do it for 30 years, you turn 1,000 into 5,500. You did nothing. Somebody gave you 4,500. This is exponential growth. Okay, so some people say this is sick, this is unnatural, and that's why compound interest is bad. Let's do another example. There's the farmer, and he's growing wheat. And he's growing a bit more than his profit is a bit bigger than he needs. So what he does is he buys a little bit more land and buys a little bit more wheat. And now, obviously, he has got more money left, and he buys a little more land and grows even more wheat and keeps more money and does the same thing again and again and again. Now, will at some point belong the whole planet to this farmer? Because he keeps buying and buying and buying. Now he owns everything, right? Probably not. Now the whole planet. Probably not going to happen because, first of all, his neighbors he wants to buy something from will raise the price, right? They will raise the price by 10%, by 20%, by 50%, because they say, oh, he's got the money, he's going to buy, let's raise the price. Or some catastrophe happens and takes the land away. Or his children come and want something and spend the money. So the risk that it's really, really bad, that's going to happen, is not really there. Now, one more example. Frank and Mark are both 20 years old. They work together and get the same salary. Frank decides to start investing $250 every single month. He's 20 today, and he invests until he's 30. And then he stops. Money works for him. So at 20, he invests $3,000 a year. At 21, he invests $3,000 every single year, $250 a month, okay? He does that for 10 years, and then he stops. Mark says, well, I want to enjoy my life first. I'm going to spend the money, and I start investing when I'm 30. And then I'll do 250 the same way Frank did. So the first 10 years, he does nothing, and then he does the same as Frank did before, 3,000 every year. And then he says, actually, I'm smarter. I will go on investing because now I earn more money. I can do that. And he keeps investing the same amount for the next 10 years, the next 10 years, until there's both 60. And at 60, they talk and compare their investment results. Mark invested 90,000, and he gets at 6%, 250,000, pretty good, right? Turning 90,000, 250, pretty good. At 8%, he would get 370,000. At 10%, he would get 560,000. That's really cool, right? 5x'd his money. Frank invested only 30,000 because he stopped after 10 years. At 6%, he would get 236,000. Okay, basically the same as Mark, who invested 3 times as much, right? So he got the same result a lot cheaper. At 8%, he gets 460,000, and at 10%, he would get 900,000. Out of 30,000, he'll make 900,000. Why? Because he had 10 years more time, even though he invested only a third. So that's the power of compound interest. The earlier you start, the better it is. If you don't have, you can't start with 20 anymore. We all can't do that. Still start now, even if it's only $10 you can start with. It's better to start now than to say, oh, in 5 years, I'll have some money, I'll start then.
The math does not lie,
No,
right?
absolutely.
That's why I said we all wish we did 30 years ago, but at least we have now.
Yeah.
We have now. We can start somewhere. We can start today.
The story with the tree, right? You know, when was the best time to start to plant a tree? 20 years ago. When's the second best time? Today. So start today, whatever, how much you have, $10, $20, $100, $1,000 a month, just start now.
Thank you so much. Thank you. One last call for questions. Any questions or any thoughts that you want to share? We're good for today. This was fantastic information, Florian. I knew it would be. And like I said, I've taken pages of notes now. Now we're at almost 4 pages.
That's good.
And I'm the type that will reread my notes to myself, but I'm very interested in your club, and we'll check out your website and look into all of that, as well as the links that you shared with us, including Wealth Simple, which is in the chat for everyone as well. And we'll share that for those of you that are watching the recording as well.
Great. One more thing, you said crypto in the beginning. Will we talk about crypto? I'm not talking about crypto at the moment. I like crypto. I made some money with crypto, good money. But right now I'm totally out of crypto because, or almost totally out of crypto, because I think it's a risk asset. Risk assets are going down in a recession. So next year is not going to be good for cryptos, and we'll get back in sometime next year.
Okay, thank you.
And
for
then we're going to talk about it again.
Yeah. Okay, wonderful. I'm glad you added that. I was about to ask if you had any final words.
Final words. Final words is just do it. Just the thing we started with. Think about money, make a plan, have systems, keep more of your money. You need a good money management system. You get that in the Money Hero system. You need a good money management system, so you keep more of your money, and then you want to make it grow. So invest it. You have a simple strategy now that you can use without any other help. Just go and do it. And if you want higher returns and more help, join the club. It's cool. We have fun and we make money.
Perfect. And how can everybody reach you?
How can everybody reach me? Florian at moneyheroacademy.com is my email.
So same in your personal name on social media as well as your business name on social?
Yes.
Money. Okay. Money Hero.
My social is Florian. You find me under with Florian Fritz. Just my
Great.
name. Money Hero Academy is my business page on Facebook, which is not super active, but you can find me there.
Would you like to share about your YouTube and or your podcast briefly?
Well, my podcast is super awesome.
Please do so.
I launched the podcast Money and Business Hero in August. So far there's 11, 12 episodes online where I'm talking with business and financial experts about the 3 pillars of financial success: money mindset, money management, and money making. We have business expert giving tips on how to grow your business, how to find your ideal client, how to grow your sales. We have financial experts talking about crypto, about stocks, about alternative investments. So lots of cool people giving you tips and ideas on how to make more money and grow your wealth. So that's actually the question I'm asking everyone. What's your best wealth building tip?
Fantastic. Okay,
What's your
wonderful. I'm
link
just
to that?
What did you say, Abby?
What's your link to the podcast?
My link to the podcast. Just a second. I'll post that one as well. I can get you that link. Here is the link to the podcast. It's on all major podcasting platforms: iTunes, Google, Amazon, whatever, Spotify. It's on everywhere. And yeah, it's fun, and there's some really good interviews on there.
great. Well, I recommend everybody definitely save the chat now, because we've put loads of information in there for you, all the ways to find Florian And if there are no other questions, then definitely I'm recommending you all to go to his website, moneyheroacademy.com/club. Read the information there. I love that he has the two options, not just to prepay in full, though there's always benefits to that, but the monthly payment plan may serve you all as well. And for those of you then that are interested in money mindset, money management, and money making, please join Florian and learn. I look forward to hearing the stories of what you all do with what you all learn through Florian. I'm excited to as well. Definitely looking to gain more and more education through your club, Florian.
Cool. Looking forward to seeing you there.
Awesome.
And thanks again for coming.
Yeah, thank you everybody for attending, whether you were here live or watching the recording. Florian, thank you one more time for this fantastic presentation. Again, you are the one that we turn to for financial training, financial education. So thank you one more time.
Thank you.
Everybody have a great day. Stay safe, stay healthy, and see you at another amazing Selling on the Spot event. Bye-bye.
Bye.